The election was good for Bitcoin, but it was vastly better for ETH. Everything that you care about in the ETH ecosystem benefits strongly from increased regulatory clarity. So, no surprise that professional investors who looked at this market and were cautious about it pre election started to be excited about it post election.
Welcome in everybody to another episode of Coinage as we're watching all the market moves post Jay Powell's speech hinting at fewer rate cuts next year, triggering a bit, and I do say a bit, of a sell-off as we are seeing Bitcoin dip below $97,000 right now. Pretty aggressive move to the downside. So excited to have back on Coinage with us today, Matt Hougan, the CIO at Bitwise. And Matt, I'm glad you're here. It's good to see you again, because I think it's times like these that, sometimes obviously they're tough to go through, but these moves are pretty violent. And yet when you back up and think about it, not that violent. So how are you kind of adjusting to what we're seeing play out in the markets today?
I think you've laid it out well. This is a sharp pullback, right? We were up around 108. Now we're down at 96. But if you step back, 96 is still a pretty good place to be. A few months ago, we were scuffling around those all-time highs, around 70K. So now we're well above that, sort of establishing our position around $100,000. I continue to think this is more of a short pullback than a reset of the bull market. The underlying themes are still very strong in this space. I'm sure we'll get into it, but for sure, the market's come back a little bit.
Yeah, I mean, actually, on the Bitcoin side, it's not as aggressive to the downside. I think as some of the other moves we're seeing play out for Ethereum, I cannot necessarily say the same. When you look at the week chart, off by about 12% now, and so I mean, when we look at those, obviously that's what you might expect in terms of the way that we've seen fund flows, and you would know better than most, Matt, with Bitwise both having the Bitcoin ETFs and the Bitcoin ETF and the Ethereum ETF. But what do you make of, I guess, the outlying volatility for some of the altcoins relative to Bitcoin right now?
Yeah, particularly ETH. Glad you called that one out. I felt like ETH had finally gotten its mojo back. It spent most of 2024 in the doghouse. People were starting to get excited around it again. It was rallying up around $4,000. To see it pull back is a little bit painful. I look at this as more of a buying opportunity on ETH than anything else. Underneath the surface, we've still turned the page on ETF flows into ETH. Those are now aggressively positive on a daily basis. We're still seeing, AI agents built in the ETH ecosystem gaining significant traction. We're still seeing ETH take market share on the stablecoin side. So I think the underlying trends are significant. But look, altcoins had finally started to rally. Now they're getting a little bit of a reset. I suspect that there are more value buyers in crypto now than there used to be. So I suspect it will find a floor, but for sure, it's painful to those ETH holders who are finally starting to feel good again. They've just gotten smacked down as soon as they put their head above water.
Yeah, it's also a bit painful for Coinage as a show that has most of our treasury, if not all of it, in ETH. But when we talk about maybe, we were just chatting this morning with the head of research at Grayscale about some of this too. And, he's basically saying, don't panic. And when you talk about the moves that we're seeing play out, we're down by about another 3% since we had him on this morning. And so not to echo the same don't panics here, Matt, but maybe to dig into what you're seeing in terms of where this stops, how much is still left to unwind. Obviously, in the longer term, I think everything that, we had you on last time to talk about still intact. But when you look at maybe what to parse for the shorter term, how confident are you that this does eventually stop?
I'm pretty confident. I mean, you've been through this before. I've been through this before. I do think something important has changed in the crypto market, which leads me to believe that this will stop sooner than it might otherwise. And that's we've chopped off sort of the left tail of crypto returns. I think previously, a few years ago, if we had a big market pullback like this, you'd start to see the news stories about, is this the end? Is crypto going to zero? Is it all over? I think those have been well and fully put to bed, right? Remember, we now have folks like BlackRock in the ecosystem. We have Wall Street firms building on ETH. We have multiple positive drivers. So I think there's more of a cushion under ETH than there used to be. And I'd be surprised if we pulled back significantly from here. There's been a lot of building around this area. And, I think the long-term trend is up. We're still confident in our 2025 prediction, which sees ETH go above $7,000 by the end of next year. So I think all of those trends remain intact.
What particularly, I guess, among those drivers, right? When we talk about some of the drivers as we wrap up 24 that would have gotten us here in terms of, the ETH ETF approval, obviously maybe getting a little buried relative to what we saw play out with Bitcoin in terms of inflows, but had recently turned a corner. I think that's partially why a lot of people were excited too, is that really started to catch some steam. I'm kind of curious what you make of why that happened over the last few weeks, just to kind of put a finer point on some of the acceleration in ETH, and maybe what that looks like to start the year next year. I mean, how do you get to that 7K price start? What are the next catalysts in your mind?
Yeah, I think looking at the ETH ETF flows is really instructive because there was effectively none. It was negative until the start of November. And since then, we've seen significant inflows, like $2.5 billion over the last 15 days or so, which is an extraordinary amount. I think there are three major catalysts for that. The first, you have to look at the election. The election was good for Bitcoin, but it was vastly better for ETH. Everything that you care about in the ETH ecosystem benefits strongly from increased regulatory clarity. So, no surprise that professional investors who looked at this market and were cautious about it pre election started to be excited about it post election. The second thing is that, the oldest story in crypto is people come into the market through Bitcoin and they study and get comfortable with crypto. And then 6 to 12 months later, they start exploring other assets, starting with ETH. So there was a huge influx of investors into the crypto market at the start of this year through the launch of Bitcoin ETFs. Those have now seasoned, they've made money, and they're starting to explore what else there is in the crypto ecosystem. And so that leads to them investing into ETH. And then the third piece was really what I talked about earlier, which is ETH getting its mojo back. ETH is at the center of, to my mind, three of the biggest trends in crypto, which is the growth of stablecoins, the growth of tokenization, and the growth of AI agents interacting with the crypto ecosystem. ETH has a dominant share in each of those three sort of industry trends.
Mm-hmm.
I think when you stack these three together, you come up with a bullish portrait. One of the reasons I'm not worried about this pullback is it hasn't changed the regulatory outlook. It hasn't changed the fact that there are a huge number of new investors coming into Bitcoin who will find their way into ETH. And that hasn't disrupted the growth of stablecoins, tokenization, or AI agents, or made it more likely to take place on other layer one blockchains. And so my fundamental thesis for ETH is still intact, and therefore, still bullish, still looking at that $7,000 plus price target.
I do wonder too, though. I guess when you kind of weigh out where we are, the other exciting piece, and maybe other cryptocurrency we should discuss is down by about the same margin in Solana, and a lot of excitement building there just because of the idea of eventually getting the green light to have a Solana ETF. I know that that's something that we talked about last time. And I know overseas, looking at opportunities there, we should talk about in terms of Solana. But when it comes to that, I wonder if there's any fear around too much dilution of investor interest, right? We were just talking, it took so long for investors, traditional investors, to really figure out what the opportunity is with ETH, as you just laid them out. But then you could make the same case that all that stuff is also happening on Solana. And I wonder if there's too much in terms of dilution of investor interest, particularly when it comes to traditional investors around these things, if that is to also play out with Solana. I'm just kind of curious to get your estimation of how much excitement there is there in flow.
Yeah, I think you're right. I mean, you're sort of playing out the altcoin thesis, right? Which is that wealth builds in Bitcoin and then trickles into ETH and then trickles into the next asset until it exhausts itself. That's been how altcoin cycles have gone historically over the years. The reason I'm not worried about that dilution of interest right now is if you think about that as like a series of buckets, which has historically been what it's been. This time, there's a difference this cycle, which is there's a huge flood of new money coming into that Bitcoin bucket, and it has months, quarters, and probably years to go. And so we're constantly refilling that bucket, even as it flows into these other assets. From an ETP flow perspective, I actually think the biggest winner, if it happens next year, is going to be an index product that invests across all of these assets, because I think there is some sort of like, which one do you choose question here on Solana. But I think there's enough new money coming into crypto writ large that the ecosystem can lift all of these boats, and that's what I expect.
Well, we're going to be chatting with SEC Commissioner Hester Peirce in just a couple of hours here on Coinage. She likes to come by. I like chatting with her; it's always fun. But when we look at that, we talked with her last time about ETH staking, or the idea of staking within some of these things that obviously was not approved before, but that she was open-minded to the idea of that eventually happening. I'm curious to get your take on that, because I guess to what you just said, it would also attract more money into these ETFs if that was an additional way to unlock yield, or make money via those as well. And obviously probably be good for Bitwise as well. So I mean, when you look at that, are there other kind of I guess upside catalysts that you think are not getting enough traction when you talk about maybe having a new administration come in and completely change the idea of crypto in the US?
Yeah, on an ETF specific side, I think you're going to see improvements in the ETFs. So you mentioned staking. I think that would be a big improvement if we could see that happen on the ETF space. The other big improvement would be in-kind creations and redemptions, which would both make the ETFs more liquid, more perfect, lower cost, etc. So you're going to see this improvement beyond what the SEC can do. I think you're going to see ETFs be approved on more wealth management platforms. Important to note that as exciting as the flows into these ETFs have been, they haven't been fully approved on Morgan Stanley and Wells Fargo and UBS and other major wealth management platforms. Clearing out the regulatory clouds makes that more likely to occur. So I think that will happen as well. But more broadly, what removing the regulatory cloud, or sort of the regulatory sword of Damocles that's hung over this industry, will do is unleash a million entrepreneurs who are going to build in the ETH ecosystem, who are going to build in the Solana ecosystem, who are going to build in other layer one blockchain ecosystems. I think the regulatory uncertainty has kept some of the best, most established, and most exciting entrepreneurs out of the space, and that will be lifted as well. So there are really multiple levels to what this change in Washington will do, from ETF specific to well beyond that, that I think we'll start to see sort of pay dividends in 2025.
Okay. Yeah, no, I think obviously, again, as we've reported and as we've kind of navigated as a US based crypto project trying to create a community owned enterprise here at Coinage, it has been tricky to navigate, and I won't disagree with any of that. When it comes to, I guess, other people building in the space, the big question there, I suppose, is how much that might move the needle, whether it's inside. You and I were talking before we started, whether it's kind of a narrative around companies that are already in crypto we should be talking about, or whether it's new money coming in through the ETFs. And you were kind of talking about flows and which ones are behind this move lower. And I suppose we could debate that. I'm not entirely sure how how useful that debate may be, because the charts are what the charts are. But I mean, when you dig into it and see kind of flows for Bitcoin right now, net on net of all the Bitcoin ETFs, actually positive for December 17th and 18th. What you make of that, I guess, in terms of unwind in crypto land versus new money coming in?
Yeah, I mean, yeah, crypto can't blame the ETFs for this pullback. They've been buyers. They can't blame MicroStrategy or the Bitcoin miners for this pullback. They've been buyers. The drivers of this pullback, are either crypto native investors, or more specifically leverage. Right? We've seen $1 billion in levered positions be blown out over the last 24 hours in crypto. If you want to point the finger at someone and say you're driving this pullback, it is the levered positions that have built up in the crypto market. And that's, of course, a story as old as time. Almost every crypto pullback in history of any size starts with a news issue that moves the market a little bit. And then you get cascading blowouts of levered long positions until you bottom out. That's just native to the crypto community. That's exactly what's going on now. It's not a fundamental retracement, it's a cleansing of leverage in the system. And ultimately, that puts us in a stronger position. But it is painful, and it can continue for a while. It's pro-cyclical, to use the term. And I think that's really what's driving this. It's not the ETF flows, which are positive. It's not the corporate buyers, which are positive. It's not the governments, which may be positive.
Yeah.
It's levered investors in crypto.
Well, I think, I mean, you mentioned MicroStrategy. I think that one was playing out publicly in ways that I think maybe the last couple of weeks, maybe people who hadn't known, maybe weren't so closely tuned to things like you or I am in terms of MicroStrategy's strategy to really continue leaning into and make a levered bet on Bitcoin. And, when you look at MicroStrategy's stock right now, not necessarily super far down in terms of where we're at. And I don't think Michael Saylor is going to be deterred here in terms of pursuing the strategy he's already laid out. But that is one that was discussed a little bit, Matt. I mean, when you look at that as a driver, some of the buys were on par with kind of the inflows from the ETFs, which is pretty astounding when you really think about it. But now he's got other companies doing the same thing. So I'm just kind of curious in terms of when you do talk about leverage, how important you think that is to the overall moves we're seeing.
I mean, I think corporations are a big source of demand. They bought 250,000 Bitcoin over the last year, and that seems to be accelerating. 250,000 Bitcoin is more than all the Bitcoin mined, right? I think there are three major new buyers of crypto, which is corporations, ETFs, and governments. And they're each very important. As regards to, like, I don't think MicroStrategy's built up enough leverage to be any sort of systemic risk in the system. I think those fears are overblown. I
Mm-hmm.
worry a little bit about some of the sort of MicroStrategy copycats that may not be as careful as MicroStrategy in this space. But we're still early in this trade. Those are properly thought of as long-term sinks for Bitcoin at this point. There may come a point where maybe not MicroStrategy, maybe others become points of concern. But I don't think that's the unwind we're seeing. The unwind we're seeing is, retail speculators, is my guess, who levered up with the sustained bull market post-election, and now they're getting blown out. And that's a natural part of what happens in crypto.
I don't know. I mean, it's a pretty large, when we're talking about like how much has come off the total market cap in the last couple days. I think it's like $500 billion. I don't know how much retail. I mean, of course, leverage makes it even larger. But I wonder how much of it is all retail at this point, and how much of it could be something else. Particularly as you said, I mean, it's more people now looking at the Trump trade. And I'm sure you saw like the idea of maybe too many people giving credence to the idea that a strategic reserve would happen, or debating whether or not the government just holding on to the Bitcoin it owns and kind of setting that aside is technically a strategic reserve. And maybe people saying, look, let's comment on that talk. At least that's kind of the debate in crypto land right now, Matt. So I'm curious to kind of get your take on whether or not maybe some of this went too far too fast. And that's always what happens from a narrative perspective, but how real maybe some of that should be applied here when you think about what is fair market for where we should be.
Yeah, look, I think the strategic Bitcoin reserve is not priced in any way, in the market right now. I think if the U.S. legitimately goes into the market and buys 1 million Bitcoin, triggering other governments to go in the market and buy their own million Bitcoin, I think the price of Bitcoin is more at like $500,000 or $1 million than it is today. So I think the market is relatively honest with itself that that's a low probability event, or it would
Mm-hmm.
be much higher than we see, right now. Mostly, I think, again, this is a market that ripped from 70 to $108,000. That is a huge increase in market capitalization. It's a huge percentage move over a very short period of time. I think
Yes.
this is probably a natural reset, and of course, it's amplified in the altcoins, if you want to call them that. It's amplified from everything from ETH on down, which had truly spectacular moves and now are resetting. I mostly think it's just a natural reset.
Yeah, no, I think that's, I mean, obviously, again, seeing the chart, I chuckle because it's crazy to think that there's panic when we're sitting at 96. But I think, to the point of retail traders and whether or not they aren't as levered to Bitcoin versus some of the other altcoins, I think may be fair. That does seem to be kind of the main message that we get every time we have guests on the show. And I think that divide is increasingly there. But as I said, you guys have eyes into both the Bitcoin and ETH interests right now. And let's talk about Solana, because I think that is a big one in terms of the next thing to come. When you look at the expectations around that, and Ripple, another one that kind of came out of nowhere on a lot of people's crypto radars, just saying, whoa, that move. Didn't see Ripple leading in Q4. I mean, when you look at those kinds of things, what do you see from investors in TradFi right now for demand there?
Yeah, I'll take Ripple first because it's been surprising to us. I think there's substantial demand actually, and substantial interest in Ripple and XRP. I think people are looking at an asset and a blockchain that a lot of crypto writes off as like a vintage 2017, hasn't really done anything. But there's an outside perspective that through an extended bull market and huge regulatory pressure, a community and a blockchain, which is extremely low cost to operate, has persisted in having interest. And it's now sort of unshackled to some degree from that regulatory threat, and it's starting to do things that are interesting in the market, like roll out its own stablecoin. That's not a guarantee that it will be successful, but there is really, probably to someone who's crypto native, a surprising degree of interest in XRP and what Ripple is doing, and a surprising resonance with mainstream investors. So I think that one is probably underhyped in the crypto community compared to what the outside world thinks. I think that they're interested in Solana as well, right? Solana is a great comeback story. It has enormous momentum. It really does have a good user experience that resonates with people, and I think they're interested in that as well. Again, I think crypto investors in the year ahead, particularly the new investors who are coming in, are going to be sort of plural investors. I think they're going to want broad-based exposure to multiple crypto assets. I don't think it's quite as tribal as it is within crypto. I think sort of the net new money coming into crypto is much less tribal and community oriented and much more industry oriented. So you're going to see them making bets across the space.
Yeah, the tribalism in crypto is always a very interesting thing to digest and navigate, to be honest with you. But on the learnings from opening up the staking ETP in Europe, I do want to kind of try and dig a little bit deeper into what you think could be applied here in the U.S. As we said, again, new chair at the SEC coming in, huge hype and huge expectations around what could potentially be done here in the U.S. So, what was the takeaway from that experience, and what you expect to see in 2025?
Yeah, I mean, the first thing to note is that staking is really important in the Solana ecosystem, right? The way that protocol is designed and the way its tokenomics is designed, stakers earn a remarkably high yield compared to many other chains. And so there was significant demand for an ETP that has access to staking rewards. I think what you'll see in Europe is a demonstration that ETPs can successfully stake and can navigate the liquidity issues that surround that through inflows and outflows. So it would be a great proof of concept to US investors who, of course, can't access those markets. They're closed to them. And I think hopefully it informs what high quality crypto asset managers do here in the US. In the end, ETFs, ETPs are supposed to help retail investors and other investors access opportunities at the same level as institutions. And those institutions want exposure to staking rewards. I think every investor should have exposure to staking rewards. So I hope, what we heard in Europe is we want sole staking rewards in an ETP format. We definitely hear that in the US as well. That can now be served in Europe, which I think is fantastic. And hopefully it can be served in the US at some point in the future.
Yeah, as I said, we're chatting with SEC Commissioner Hester Peirce. We'll get her take on some of those things again in just short order. But Matt, I know we're running out of time here, so I do want to back up and just kind of think about the main kind of takeaway. I got hit up by friends, a couple weeks ago saying, "Hey, should I sell my ETH?" And I didn't think that would be a good thing to do right now. Seemingly less correct as we look back in hindsight, I suppose. But there's a lot of room to run. So, I mean, you tell me what our viewers should know in terms of navigating this now, what the right way to think about this sell-off is.
Yeah, my view is that this is a hiccup and not a reversal in trend. But the thing I love to tell people, you probably get this all the time when crypto is ripping and it's new all-time highs. Everyone's telling themselves, "I wish I got in at X, and if there is just a market pullback to X, I will invest." All too often over the last 7 years, I've seen people make that promise to themselves. But then when the market pulls back, they don't actually act and get in as they said they would. And so the only thing I would say to folks is like, look, if you underwrote crypto a few days ago when it was Bitcoin 108,000 and ETH 4,000, and you said, I'm just going to wait for a small pullback to get in, Uh, is if that's the case and this is the pullback, maybe it is time to act on that. And if you're looking for more of a pullback, maybe you should write down the number at which you would be happy entering this market. These pullbacks can be gifts, but they can disappear as quickly as they appear. So I would just encourage people to keep that in mind as they
I
look
do
at
want
this
to end
market.
on maybe that note in terms of how quickly this will disappear, because I was reading your thread, which again, love following for your guys' research as well as the other people on the Bitwise team. Very smart group of individuals, may I say. So shout out to you guys. But also in terms of, I guess, your preferred metric, you were looking at kind of short-term pricing versus longer term, and looking at kind of where things go. But I mean, when you back up and look at that and look at all the indicators you have, what is, I guess, kind of the advice when we shift back to Bitcoin and the idea there, kind of what numbers you're watching?
Yeah, I mean, the trend is still intact. Our favorite momentum indicator, are we in a bullish trend or in a bearish trend, is looking at the 10-day exponential moving average price versus the 20-day exponential moving average price, which is just a math-based way to tell you if the market is ascending or losing momentum. Right now, that trend is still on. It's still telling you to invest. We'll see if that's true tomorrow, the next day. But until that reverses, that's sort of like my first signal that I should start paying attention to this pullback, that it may be more extended than I otherwise expect. Right now, that signal still tells me it's a bull market. I'll update on Twitter when that changes, but right now, the bull market is still on from my favored momentum perspective.
Yeah, quantitatively, I feel like that's the main takeaway. And then qualitatively, we were chatting with Fundstrat not too long ago about, look, the Fed kind of gave the market update that happened on Wednesday. We see this pullback, but like fundamentally, if you don't think anything in the market has changed around a lot of the catalysts to come for crypto, then nothing has really changed. And so I think when you back up and add, the qualitative piece of this story, Matt, to the quantitative piece and the technical piece, I mean, the main takeaway does seem to be that nothing fundamentally has changed outside of perhaps maybe some leverage coming off the table, if that is all that this is. Is that maybe fair to end on in terms of the takeaways?
Yeah, that sounds exactly right. I think that's true. I don't think the Fed is determining the fate of Bitcoin or Ethereum or Solana in 2025. Crypto has its own momentum. None of that is reversed. And so, yeah, this is a hiccup and not a reversal, is where my current thinking is.
Well, I can't thank you enough. I know it's basically holiday time. I know everyone's busy this time of year, and I know you guys got a lot going on at Bitwise, but I appreciate you coming on. As always, Matt Hougan, CIO at Bitwise. Thanks again, man, and hopefully we'll have you on again soon.
Yeah, thanks for having me. This was fun.
All right, appreciate it, sir. For Matt, for myself, for everybody here at Coinage, that's going to do it for this edition of checking in on the markets. For all the biggest headlines in crypto, as always, we amalgamate them. We put them out there for you to digest at coinage.media. Appreciate you tuning in again. We'll see you again soon.